So it's up in a way, 150 points higher. What a solid rally we have going on the index, 12,076. And there's absolutely no let up. There is no selling, at least right now, in the last hour at all. Both our guests are with us. But Anuj, I mean, the screen is so strong and solid that we're not even getting the usual routine profit taking you might expect at these levels. It's just a one-way move today.
I think right now might be a good time to book some Surabhi. if you're in it. Look, the time to buy was in the morning, and the market gave you that dip, or perhaps on Friday, when the market gave you that dip. Now, if after this move you buy here, then tomorrow morning there's a risk of the market giving you that dip, perhaps. But the larger message of the market is that you continue to buy the dips and make money. If you chase market like this, like look at the move in PSU banks now. If you chase market, Surabhi, there's always a risk of something like Friday, which happened. Intraday, all of a sudden that big decline. That risk is always there. So it's always better to buy on dips in this market, because when you buy on dips, you created some cushion. If you're buying here, you're buying absolutely with no risk reward. Buying absolutely at the highest point. That's a bit of a risk, but the theme still remains to, whenever the market next gives you a dip for any reason, and dips will come. They keep coming in this market. It's not going to be a one-way linear move. And next time when the dip comes, you should be brave enough to buy.
Speaking of buying, check out what's happening on ICICI Lombard, stock that's up 4.5% thereabouts. I mean, these are stocks that people are speaking of in the market. Remember, we were having a conversation with IIFL, Institutional Equities, and it was one of the key stocks on Aeon's list. So, big move. Obviously, there's some interest in that stock that's come through. Today, it's been a strong day for Page Industries. It's made a comeback. Stocks like Dabur, Jubilant Foodworks, a couple of these consumer names have also made a comeback. Mr. Tulsian, as you're looking at the interest back in the mid-cap market full throttle, how to approach some of these beaten down names, whether it's a Page or, Jubilant, etc., the old favorites. Should you look at them right now?
See, Surabhi, on the election day, I have said that, look for the sectors which have a growth potential, number one, and number two, look for the stocks which are ruling at a maybe P multiple of less than in the single digit, and I stick to the same parameter. Now, coming on the Page Industries, no point in chasing the momentum, because if you see the stock having given a growth of in the earnings on a yearly basis of less than 15% and giving a P multiple of even now at 50, I don't think that it holds any value. So yes, there are umpteen number of ideas. No point in just taking the destruction in the value of the stock that it has corrected from 32,000 to 20,000. So now go and lap the stocks. In fact, you need to take a call on the sector. And I warn that in the inner garments, if you take the Dollar or Lux or Page, in fact, that has been the financial performance and growth for all the peer companies in that group or in that sector, which have shown a growth of about maybe 15% or less than 15% in the bottom line for FY19. No point in taking a quarterly call. So yes, no point in chasing that. And you have the umpteen number of stocks available. And in fact, we have said in the last 1 week that auto and auto ancillaries are really seen to be quite good, because you will be going to have a pain of maximum 1 month for the month of June, though I'm not keeping that also I'm not apprehending that also to happen. So yes, this is the best time, because all the stocks in the auto and also auto ancillary sectors have corrected by about 30% in this last maybe 2 or 3 months. So better to look for them. And they are ruling at a P multiple of, in case of auto ancillaries, they are ruling it in a P multiple of 8 to 16. While in case of automobile, they are still ruling at a P multiple of anywhere between 12 to 18 or 12 to 20.
All right, Mr. Tulsian, thanks a lot for your time today. We'll talk to you tomorrow. For now, some more stocks looking quite good right now. Titan, just look at that stock. It's a fresh all-time high as we speak on Titan, 1263. Just pull out that stock intraday, and there it is. What a phenomenal move it's been for Titan. And in fact, now we're talking about a market cap of 1.12 lakh crores for Titan. Just phenomenal. In fact, this is now the second most valued Tata company after TCS, and really stunning move. Nishchal, before we thank you, your thoughts on Titan? It's just, defied gravity.
Yeah, Anuj, I think today's run maybe because gold has been hitting a 3-month high, and that's why I think as and when we've seen basically gold going up, we've always seen basically Titan doing well. I continue to like the company. Obviously, the valuations have been a bit challenging, and it will continue to remain challenging because There is no other company basically close to that as far as jewelry is concerned. So yes, if you are a long-term investor, I think still a good bet.
All right.
Positive thumbs up on Titan.
All right, Nichal, thanks a lot for your time today. It was good talking to you. We have our next guest now joining us. Gautam Duggar, Head of Research at Motilal Oswal, is with us now. Gautam, hi, good afternoon. I wanted your thoughts first on the sector you tracked very closely, autos. Is today just a powerful short covering move, just a bit of a hope trade playing out? Or do you reckon that these stocks perhaps could have put some kind of bottom in place?
Hi Anuj, good afternoon. I think autos you have to look at stock specific obviously. I mean today's move is also a reaction of monthly numbers which have come out yesterday, and I think they don't make for a very pretty reading barring one or two companies. What I think probably people are reacting to is a renewed hope of some bottom having been made as far as volume numbers for the auto companies are concerned, and expectations of a rate cut on 6th of June, and then subsequently possibly some measures from the government to revive the sentiments in rural markets as well. And obviously most of the stocks have corrected 30-35% from their respective highs. So valuations clearly are looking relatively more attractive. And you've had a very strong event out of the way now. Elections first 6 months of this year were spent debating about elections and politics. So, there was concern about consumption and slowdown and that getting more entrenched, which has actually got entrenched if you look at the data which came out on Friday for GDP. But I think now there is a hope which is forming around a view that, from here you can just improve. And to that extent, some of that is reflected in the way many of these auto stocks are trading today. For example, we like Maruti, been, pitching it as a top idea in the sector, but the monthly numbers have been very bad for last couple of months. But from here on, if inventory is already corrected and you have seen crude price correction also, if there is some support on liquidity, maybe it's a very good price to enter Maruti.
Is it the same hope that's lifting FMCG stocks today, Gautam? Good afternoon. I mean, Lever, you're seeing that interest come back in names like Dabur, seeing people head back to a Jubilant today, even a Page Industries for that matter. Is it the same reasoning? Hope that there'll be money in rural India and higher incomes?
Yeah, to an extent that, plus the hope that the budget that will be presented on 5th to 6th of July, that will have some measures for rural consumption. So that is also driving a rally. Second, the stocks had corrected. But the fact remains that many of these names are very expensive. So one has to treat very cautiously. Look at, when you look at these consumption names, be it, Hindustan Lever or any other name in that space, most of them are trading upwards of 50 times 1 year forward. So if, you see consumption not reviving, this stocks can obviously go through extended period of time correction. But at the same time, you've also seen $10 of correction in crude oil prices. That augurs very well for consumption companies' margins. What we like in that space is Titan, Britannia, Hindustan Lever, and obviously Page, which we had downgraded a couple of quarters back. That has corrected quite significantly. So that is one name which I am very interested to look at.
Just look at the intraday chart on IndusInd Bank once. This is a big move happening in the stock right now. In fact, it's now at fresh intraday high. Gautam, how do you approach a stock like IndusInd Bank? Of course, ever since Mr. Sopti's commentary, you saw that 200 rupee rally from the almost 52-week low price. But there are still concerns, right? That's why it's underperformed its larger or its peers. Earlier, it used to be performing in line with Kotak and HDFC Bank. That status is no longer there. But your thoughts on the stock?
I think many of these names, whether it is IndusInd or some of the other corporate banks, you have to recognize the fact that they've gone through a lot of pain in the last 12 or 15 months. Specifically to IndusInd, they've recognized some of their exposure to the stress assets. And from here on, the stock performance would be a function of how the earnings growth trajectory pan out. I mean, fourth quarter was an aberration, but if you look at the long-term trajectory of this bank in terms of earnings growth, the compounding has been anywhere between 25 to 26% for the last 7-8 years, and that's a fantastic track record to have. Stock has corrected from whatever 2,000 odd levels to 1,500. It has given a bounce in the recent market up move. I'm very positive to look at it. Plus, you have the whole BaFin merger coming up. That should also boost the overall numbers and return ratios for the bank. Obviously, the departure of Mr. Sopti and potential successor, uncertainty around that could play out for a while. But for an institutions like HDFC Bank or IndusInd Bank, maybe this is a time where you get into it from a long-term perspective and take a fresh look at it, because a lot of the exposures which is concerning the market has already been factored in.
Gautam, a very interesting pick in your large cap basket is Bharti Airtel. Now, help us understand this, because there is still, they are of course sort of doing away with their low value plans, but there's no sign of a meaningful tariff hike from Jio as yet. 5G auctions are looming, and I was looking at commentary from Mr. Vittal himself. He himself says that the pricing is quote unquote exorbitant. So where's the optimism coming from on Bharti Airtel?
As far as telecom is concerned, you have to understand that this sector has given zero returns in the last decade, and more so the competitive intensity which has gone up in the last 3 years post the entry of Jio. Now, what we have seen in the last 2 quarters for Bharti Airtel is bottoming out of the domestic ARPUs. You have seen a turnaround in the domestic business. You have seen a very strong quarter-on-quarter EBITDA growth this quarter, upwards of 30%, which has been far better than expectation. And at the same time, from a balance sheet perspective, while the leverage is high, the incremental steps to deleverage the balance sheet is providing confidence, whether it is the IPO, rights issue, the whole towers deal. All of that is providing some hope, and stock has been battered. So when we introduced this or reintroduced this model portfolio in January, it was at around 300 and still at whatever 350, 360 price. I think this is a name where the potential risk reward looks beneficial. Obviously, with a competitive intensity like this in telecom sector, it's very tough to predict short-term numbers. But I would think that the whole bottoming out of ARPU that we have seen even in Idea, that provides a lot of confidence going forward, and all of this has been achieved without substantial churn in their subscriber base.
Okay, other interesting name is HDFC Life. In fact, Gautam, this is one space where we are seeing a huge comeback, whether you look at ICICI Pru or HDFC Life. What do you think is leading to this kind of move?
Now, see, a lot of these names where, whether it's HDFC Life or Bank or even Bajaj Finance, these are names where you don't, look at quarterly numbers very intensely. Obviously, there are a few quarters here and there which come and disappoint you, but these are allocation stocks. These are stocks where, the underlying theory is underlying story is very robust and can last for next decade also. Plus, the track record is tremendous, and we are still entering into a period from where the under penetration of financial savings is still very high in India. So any dip in this kind of a stock is always a buying opportunity. You saw what happened with Bajaj Finance. Post the whole ILFS crisis, we had seen the stock correcting from 26,700, I think, back to 1,900, 2,000. 2 good quarters, 50% plus profit growth and 40% plus AUM growth, and very steady asset quality, and look where the stock is, it's up 70% from there. So with this kind of stocks, it's always best to stick around and play for the long term.
Such a strong market, and you're getting such consistent, simple charts today. I mean, look at RIL, steady days high on that stock. A lot of the auto names that we've already mentioned. IndusInd Bank that Anuj just pointed out, again, days high over there, 3.5% up. So the rally continues. Gautam, now I'm going to ask you about what not to buy in this market, because it's also very easy to get carried away because there's exuberance, there's a lot of hope in the air. What are the kind of stocks or themes or the kind of noise that you will strictly stay away from in this hope trade?
See, if you look at the earnings performance, the earnings season just got over on Friday. If you see the earnings which came through, couple of sectors where the pain seems to be quite well entrenched. One of them is pharmaceuticals, the other is now metals, and third is oil and gas. These are the three sectors where we've been having a very cautious view. Metals, oil and gas, and pharma, and that view continues even after the conclusion of earnings seasons. So those are the names from where I would, for the moment, stay away. While metals for the quarter. They've beaten our estimate, but I would think that incrementally the operational drivers for the P&L are getting weaker for that sector. In oil and gas, obviously, now that the political uncertainty is behind, there will be some interest in OMCs. Crude is corrected to 62, 63. So one of the OMCs that we like is IOC, but besides that, I would be very cautious in oil and gas also. So oil and gas, metals and healthcare, these are the three sectors where we have a very cautious to underweight kind of a stance. Okay,
actually stole my next question. I was about to ask you on oil marketing companies. Let's have slightly detailed answers from you on that. From an investor's point of view, could it be a case of once bitten, twice shy? That 1 rupee move, a lot of people have still not forgotten, of course. So, do you think the companies will not get the kind of valuation that they got, say, 1.5 years back, or do you think the market will move on and just sort of forget it? And if crude prices inch down further, say below 60 or thereabout, there could be a fresh re-rating.
See, Anuj, for this stocks, it's always important to follow the underlying crude prices than the pricing. Of course, that is important in a deregulated regime, but those kind of moves come very closer to the elections. But on a sustainable basis, it is important to have a view or have a monitor on the crude oil prices, and that is far more important for the valuation drivers of the stocks than what the government does once in a while. So at the moment, crude is looking benign at 62, 63. Elections are out of the way. Next elections are only 6 months away. So these are all trading stocks. They give you trading rallies and then they correct. So one has to be very nimble and agile when you trade in this kind of stocks. These are not long-term investment stories or stocks that we discussed just a couple of moments back. Here, these are more trading kind of stories where, depending on crude oil prices, you have to keep taking a view and change the view also.
Okay, well, it's great talking to you as always. Thanks, Gautam, for taking out the time. The mood right now, I guess the view right now is largely optimistic in the market. So let's see how long that lasts. So far, so good. Speaking of the mood and the expectations from Modi 2.0, here's a big voice coming in. Earlier in the day, we caught up with Mr. Uday Kotak in his capacity as the president designate of CII. Here are his expectations from Modi 2.0 and what perhaps the government's priority should be like. He also talks about the lack of transmission within the banking system when it comes to rates just ahead of the RBI policy.
If you look at the Indian economy, it's on two legs, consumption and investment. Consumption has slowed down recently, but for the first few years of this previous government was in good shape. Investment is where the challenge is. And within investment, the government has invested pretty actively over the last 5 years. It is private investment. And in order to get private investment back, we need entrepreneurs to feel like putting money to work. This is probably a very good time to really put up capacity with a 5-year view.
Okay.
I would go for smart capacity addition. I would like to see, obviously interest rates need to correct downwards. I would like to see liquidity continue to get better. And we need to also make things easier. If you look at the entire situation, there's a lot of preemption of high rates of interest paid on savings. For example, small savings rates by the government. They're much higher than the deposit rates of banks. Therefore, if banks have to get deposits, there has to be some parity in how the interest rate cycle works. Today, there are 4 taxes on equities. Number 1 is corporate tax. Number 2 is dividend distribution tax. Number 3 is tax on dividends, about 10 lakhs. And number 4 is capital gains tax, which has come back. So we need to encourage equity investment to get the animal spirits back. I think if we want animal spirits back, people should be ready to invest equity into new projects. There is a challenge for equity savings in this country as the traditional promoter class has got into hibernation. We need to get equity and risk capital and risk appetite back. I think 25 basis rate cut is reasonably baked in by markets, but it has to be combined with transmission. And for banks to transmit, they need their cost of deposits to come down. For the cost of deposits to come down, alternative instruments should be at reasonable parity.
Okay.
And this is where the issue is. Small savings even now pay over 8%. And a 20% of delta mobilization of fiscal deficit is coming from small savings at much higher rates than government securities rates.
Right.
So bring parity back and make sure that transmission of rates happens through better liquidity and lowering of deposit rate.